We are going over the winners and losers in the portfolio. We're going to make some modifications. It's been a challenging year in 2018. The end of 2017, the last quarter, and the first quarter of 2018 have been very challenging. A huge transition in volatility, larger than I've seen before. And I'm going to show you some VIX data here in a minute to confirm some of that. But we're going to go over some of the best strategies that we're going to keep and the worst strategies that we're going to get rid of. Here's the VIX data. I want to pull in here. I created this chart over this weekend, and what you see is the years to 1990 and the average VIX. The average VIX for this entire time is from 1990 to 2018 is 19. It was around 19.3, 19.6, and here is the standard deviation. The average standard deviation is around 7. And so you see in 2017, this is pretty eye-popping to me. The VIX, the average VIX in 2017 was 1108. This is the closing VIX from TradeStation $VIX.X. 11.08. The standard deviation really stands out. I've never really spent a lot of time paying attention to the standard deviation, but to have a low VIX and then to have a low standard deviation of that low VIX means there's just no price movement, and we talked about that. We had constantly adjusted the portfolios to trade more counter trend strategies, buying dips. Almost anything that bought a dip in the market worked. You could just throw a dart at it and come up with a strategy that bought a dip, and it would have a great performance summary in 2017. And in order to actively trade, we implemented some of those strategies, and those strategies do terrible in high volatility, and so we've then adjusted to that. So we're at 17 average VIX in 2018 so far with a standard deviation of 6, and the long-term average is 19 and 7, and so we're right there in that range. The intraday ups and downs are I don't have a method for measuring that exactly. You can get a wide range in the S&P and it be a straight line trend, or you can get a wide range and there be 10 or 20 ups and downs potentially. And so it's hard to trade constant reversing markets in a wide range, but we have some strategies that are suited for that, and we're going to be implementing those, and we're going to be cutting these strategies that underperform in this low VIX environment. There was one lower VIX in this table, one lower standard deviation, and that's 0.97 in 1995. And so it does exist, but the VIX was 12.3, and we've had VIXs in the 12s before. Back in 2006, the VIX and standard deviation of VIX, those were challenging times as well. But in recent years, we haven't seen that, and we have never seen the combination of a VIX this low and a standard deviation that low. The standard deviation, yeah, it was 0.97, but the VIX was a little higher, and when you get this low, there's the difference between 12.3 and 11 can be significant enough, and so 11 is really low, and now we're back to normal, and we're going to adjust back to normal, and we're going to go with our top strategies, and I'm going to go over the strategies that we have. Now with these counter trend strategies, we're going to go over the worst strategies first and the best strategies and the ones that I'm looking forward to discussing with you. And so gap fill in reverse from our book Algorithmic Trading Systems, excellent strategy in low volatility. Not a good strategy in this market. It's done nothing but lose, and it's been a straight down equity curve, and you see that. And so the opposite of this would work. Basically, gap fill in reverse is the market gaps up, and then it fills that gap, and then it reverses, and there's just small movements in general. It's designed for movements that where markets reverse. It's possible that you can get a gap fill in reverse in this market if you're close enough to the turning point of that day, and then if you take the profit target off of that, it could be a great strategy, but it's too hard to call. And what works better in this market is to reverse this strategy in high volatility and take the gap fill and do the opposite. And so gap fills work in high volatility. Gap fill in reverse tends to not work as well. It would have to be more fine-tuned. And so we're Xing this strategy, gap fill in reverse. Counter trend max is another strategy for low volatility that did was well suited in 2016 and 2017, but it's done nothing but lose on the E-mini S&P and E-mini Dow. So without these three strategies, gap fill and reverse, E-mini S&P, counter trend max, E-mini S&P, and counter trend max, E-mini Dow, we are up on the month instead of down. And so we're going to get rid of those strategies. We're going to get rid of some other strategies here that aren't really worth trading anymore in this environment. It's too sloppy. The coffee market's not moving. The soybean market's not moving. We have trend strategies in soybeans, and they're just not moving. Soybeans are typically a market we can count on to trend, and it's just chopping. And so we're going to go with 10 staple strategies that for the 100K and 6 strategies for the 25K, and I'm excited about these strategies. They're the same strategies that we're already using, but they're the best of the best strategies that we have. And we're going to make one modification to Cobra 3 that I'm really excited about, and we've talked about, and it is it's taking the profit target off. We're going to trade the two variations of this in the portfolios. One is to trade it as it is. It's up 1,800 this month, and you see the trades here. Nice trade yesterday. Let's see, we had a winner there, loser there, winner there. So there's a winner there, there's a winner there. Got stopped out there, there's a stop loss there, there's a winner. And so you can see some of the trades. There's small blips on this chart because the ranges are so big. And the stop loss is 6 points and the profit target is 12 points. And we're going to trade this alongside the version where the stop loss is 12 points, twice as big, and there is no profit target. So let's take a look at that version. That version made 11.25 yesterday. It caught this short trade here. It was stopped out on Thursday. It caught another short trade here. And it's caught some big moves. And we've talked about this starting in February. How do we catch the big move? We had a post about that. And you take for example this move on February the 5th. It captured 47.50 in profit, and we exited. If our exit was a little different, we would have done even better. And so you see that it exits at I guess the 1600. There was a much larger sell-off into the close. The last 15 minutes it sold even more. Opened at 50, so what, 38 points into the close the last 15 minutes on February the 5th, and so that was a huge day. Other big days right here, you see this day right here, big sell-off, and then just yesterday there's that looks like a small movement, but it's $1,125. And so there's other days like this, and we're going to trade both these. So when Cobra 3 enters, you're going to enter in on two contracts. One will have a $300 stop loss, and another $600 and it'll have a $300 stop loss and a $600 profit target, while the other contract will have a $600 stop loss and no profit target. And so we're just opening it up. We're getting in on a trade, and we're going to work to let our profits run, and we cut our losses short. And you see the equity curve on this version in 2017. You see it's in a kind of a holding pattern, the equity curve, and in this type of environment, it has the potential to go higher. It may not catch any more of these big moves. Anything can happen in this market. Volatility could die. The market could become even more volatile, and every trade could get stopped out if you have a strategy with no profit target. If it becomes even more if the volatility becomes even more wild and more rapid up and down movements, and I guess theoretically you could have 100 up and down movements in a 40-point range in one day, and unless you have a band to buy that low and sell that high, it'd be pretty tough. It'd be pretty tough to trade the trend like that. But this is a strategy that gives us a chance to capture a big move like that. You know, you capture a $4,000 move and a $3,000 move. In February, this captured $9,000 worth of moves. I'm not saying that we will have that again, but per contract, I mean that's a full year in the E-mini S&P. If you can capture, you know, $9,000 per contract in the E-mini S&P, that's a big year just on one contract. And so if you could do that in 1 month or even the rest of the year, that's pretty good. And so the risk is that you have to take these trades with basically a $900 stop loss when you trade Cobra 3, because you're trading two contracts, one with a $300 stop loss, one with a 600, and so you're risking 900 per trade. And so there is risk. You can have you could have several losers in a row. You could easily have three losers in a row like that and have $2,700 in drawdown when you get those three losers in a row or more. So that's the risk, and that's one of the updates. And that's not really an update. We were trading Cobra 3, but we're adding that non-profit target version. Another strategy that we're trading already in the 100K portfolio that's doing really well is tick count trend 2. It has the potential to catch wide-ranging reversals, and so if you take a look at this tick count trend 2, excellent entry point. It's hard to see this, or it's hard to take a look at this entry point and say, wow, let's just take this profit target off and ride it into the close. And so I'm looking at the potential for that. You see the equity curve. This is a strategy that's done well, and it did well in 2017. Not as well at the end of 2017 or January, February of 2018, but it's doing well in March. And so really nice March. It's up. Has, what does it show? We're up 1,000 on the year on 38 trades with slippage and commission, but in March it's up 1462.50. So I like this equity curve. I like the trade that's calling right now, and potentially we'll make a modification to take these profit targets off. It enters shorts if it's above the previous day's close, and then it exits at the previous day's close. And so we may take that off to where in the afternoon, late afternoon, we take that rule out. Maybe before 1400, 2 o'clock p.m. Eastern time, we don't exit. We just exit at the end of the day or at a stop loss to give us a chance to ride those moves into the close. And so some real opportunity with this volatility if we can get a good entry and then just ride it, find a way to ride some of these moves. There's still going to be lots of chop, and so you're going to get stopped out. But if you can find a way to catch a turning point and then just let it run, it's one of the hardest things to do in trading, is to let your profits run, because oftentimes when you do that, it comes back and stops you out. And so by the time you get the big move, like this, you end up starting to take a profit, and then you miss the big move. And so that's the goal of the new portfolios, to be more precise, trade the top strategies. I'm going to show you the performance summaries for what we're going to trade, and you will get an email updating you this information as well. Let me pull up the performance summary for the 25K. Here is the Excel spreadsheet that we use. You can ignore this. This is the 25K, 6 strategies, 52, 87, 50 drawdown. It shows an equity peak because we're picking the best strategy, so it does take some additional risk since we're at worst case drawdowns to step in and trade this. It trades Cobra 3 as we're already trading, and we trade Cobra 3 with no profit target. Tick count trend 2, this is actually the one strategy that we're adding to the 25K portfolio, and so you can trade the other strategies if you want. You'll still have access to those, but we're adding this strategy, tick count trend 2. SR counter trend crude oil 2 is one that we've already added, and we're going to continue to trade. Mirror E-mini S&P, actually that's another strategy that we're adding to the 25K portfolio. So there's actually 2. These already trade in the 100K, and so we're basically trading 4 E-mini S&P strategies, and then 1 crude oil, SR counter trend crude oil 2, and SR counter trend gold. And so 6 strategies, low frequency for the most part. Tick count trend 2 has traded quite a bit this month, and so if you don't want to trade that, you don't have to. If you want to trade what you already have, you can. Definitely would remove gap fill and reverse from this strategy, from this portfolio, and you can continue to trade the other 7 strategies as they are if you don't want to make too many changes. But this is the recommended update, and the one that we'll be tracking going forward, 6 strategies, 52, 87, 50 drawdown, and here is what it would have done. The reason this profit is so huge is because of those Cobra winners. Cobra 3 is up. It was up 9,000 or almost 10,000 in February on Cobra 3 with no profit target. So all the profit in February would have been from that one strategy. And so you see the results. The annual results we're already at the annual results for the last 2 years. And so if the volatility continues, we're capturing a strong trend, and you see the drawdown curve as well. So this is the approach we're taking with the new volatility, with the VIXs that are rising, and again, we want to capture a big move and ride it into the close, and that's the goal of what we're trying to do. Next, I'm going to show you the 100K portfolio. So for the new 100K and $1 million portfolio, the $1 million portfolio is just 5 times the 100K. It's not 10 times because we deleveraged just a little bit. And we're going to add, I'm waiting for this to update. We're going to add 4 additional strategies. Those strategies are, let's see, what are they? They are mirror E-mini S&P. Okay, we have that gap continue to be. And we're going to add Cobra Euro, right here, SR counter trend silver, SR counter trend 2 silver, and we're adding gold flash. So we already have all these strategies in the portfolio. We're not adding anything. We're not adding any strategies to this portfolio. We're just removing. We basically had 23 strategies, and we're down to 10. So we're removing 14 strategies actually. We're removing 14 strategies, and we're trading 2 variations of Cobra 3 now. So 9 strategies really instead of 23. So it's a very narrow focus, and 25K portfolio is 5 strategies with 2 variations on Cobra to make it look like 6 strategies. And so this is a long video, but it's an important update, and working to, the losses have been painful, and we're working to get out of this drawdown and get back into the profit zone on these portfolios. Tired of this losing streak, and working to make up for it now with these changes. So that is the update for the portfolios. Again, you'll be receiving the files that you need. In the 100K, no new additions. You just need to copy a workspace and change this, or copy a workspace window and have additional setting, but I'll send the workspace for it. And then you need 2 ELD files for 25K portfolio. We add 2 systems to that. So I'll send the workspace for that as well, and you'll be getting those and the updates for all of this.